Yeah, good morning, and we'll just wait for half a minute for participants to join in. Just reminiscing with Vikrant and Ameya that this used to be earlier a Hangout. We still call it a Hangout, but this used to be done on a Google Hangout, which since then has been discontinued. Technology has upended so many things in life. We'll start in exactly 15 seconds.
Even budget Zoom wouldn't sound wrong. It's
Yeah,
quite
good
apt
morning,
for the occasion also.
Budget Zoom, yeah. People would be expecting budget boom.
Next year, perhaps.
Yeah. Good morning, everyone, and welcome to another pre-budget hangout. We made this a habit. I think we are doing it now for possibly 10th year in a row. Getting experts a couple of hours before the budget for a final round of pre-budget expectations, some crystal ball gazing. I think this is more of crystal ball gazing, and one expert who's been there with us all through these 10 years has been Anish. Anish, thanks so much. I hope Anish can hear us. Everyone, Shailesh is saying good morning.
Thank you very much for inviting me again on this.
Yeah, what would you do? What would we do without you, Anish? And we're joined by my good friend Ajay, Rotti, partner at Dhruva Advisors, Ameya Kunte, founder of View Advisors, and our managing editor for Direct Tax Portal, Vikrant Maheshwari. We've been inundated this time with pre-budget columns. So Vikrant will summarize them neatly. That what are the key expectations from the tax that the tax fraternity has from the Finance Minister, Mrs. Sitaraman. We will do a quick dipstick of what the pink papers are saying. Economic Times, list of prudence. Sitaraman has a work cut out today. So ET says the FM has a work cut out. Here is Mint right in front of me. Yeah, it talks about first the FPO. But yeah, leads with the economic survey. The economic survey sees FY24 GDP growth slowing to 6.5%. Let's get straight into the action. As far as this budget is concerned, the fiscal space is there. I was just looking up what was the economic survey saying in FY 2015, and I'll try to bring that up. Can I share my screen if that can be enabled? But till then, in FY 2014-15, the direct and indirect tax collection put together were roughly in the region of 13 lakh crore. Circa 8 years later, 23, we are on the cusp of 27 lakh crore, with direct tax collection itself, being projected at close to 14 lakh crore. That's quite a bit stunning growth in tax collections over the last 2 decades, but in the last decade or so, even more so. The economic survey says that this is due to digitalization, faceless assessment, more technology, thrust on compliance, crack down on tax evaders, so on and so forth. This is what I can remember from the top of my head. So there is fiscal space. Straight to Anish first. Anish, can we expect some tax relief for the salaried people like me?
I would believe so. I would think that if you see the basic exemption limit, of course, there have been debates, but the basic exemption limit was last increased in 2014. And I would think that there is space and it is time. The time may be opportune also for different political reasons to certainly enhance the exemption limit for the salaried and the middle class. I'm also expecting certain relief on the pension side, because ultimately I believe that again, pension is something and savings are something that keep this economy growing. So there should be something on the pension side as well, hopefully. So I think yes, there will be certain relief for the salaries and the middle class, as there have been, a lot of expectations also. We've been reading a lot of expectations there.
Fine. Ajay, your big 2 or 3 expectations?
I think I would agree with Anish on the basic exemption, and similarly 80C, Arun. was last increased from 1 lakh to 1 lakh 50 sometime in 2014 or 15, if I remember. And from then to today, if you just do a basic thing of cost inflation index comparison itself, that there is a case for that 1 lakh 50 to go up. So I think even that could happen. And possibly because of, again, like you rightly said, there's enough headroom to do something this year. Second, and in my view, is I think the whole approach of widening the tax space using data, using TDS, etc., will continue. Last year, we saw TDS on these non-cash perquisites for business, which before that on e-commerce transactions, virtual digital assets. I think that trend could continue in my view because it is giving them results. There's a lot of transactions coming into the net because of both TDS, GST, and of course, the sharing of data between the two. I think that thrust on technology and using big data, etc., we are going to see more of that in this budget.
Amay, any relief for people like you who are in the highest tax bracket, 42% marginal rate?
I'm not in that bracket for sure, but I want to comment for sure on the other end of the spectrum. 44% tax really kills the capital formation, and it is not accompanied by social security in a country like India, and which is why you do see a lot of conversations where wealthy individuals wanting to look at other options, be it in Dubai or Singapore, and forget tax. I think that's not good for the economy. So I think some rationalization over there would definitely be necessary, in my view, for the economy as well.
Amay, in terms of the slabs currently, I just saw a chart somewhere on TV, but quickly, can we just, to summarize, how do the income tax slabs for the personal income tax, how do they look right now? And what would the change that you would be expecting, Amay? If you are wearing the FMZ, what would you do on the personal income tax slabs currently?
So
with all the deductions.
So effective tax rate would vary, but essentially what you're looking at is a 20% and a 30% slab. And within 30%, then you have different levels of surcharge, and that adds to the complication. And then you have, for example, a dividend income, which is capped at a different surcharge. So between 30% to 44% itself, you have 4 or 5 different rates, in a sense, which is fine. There's an economic rationale to it, but the highest slab of 44% is really way too high.
Got it. In terms of the slabs itself, Anish, you think the 20% and 30% needs to be adjusted upwards every time? The rationale is it needs to be adjusted upward for inflation. Inflation in the last 12 months has really skyrocketed. So you think the slabs need to change? If yes, can you be a little specific?
If it goes up around, then yes, the slabs will also kind of realign themselves. And I would think that there is a case for realignment of the slabs. Also, I think Ameya alluded to the fact that between, just at the 30% rate, there are different effective tax rates because of different surcharge being applicable to different types of income. And I think that is something that complicates the whole scenario for a taxpayer. I would presume that, I'm not arguing for or against the levy of a surcharge. I would think, there are different reasons other than tax for the levy of the surcharge. But my point is that make it simple for the taxpayer to understand. Let him have 1 or 2 rates. Don't let him have different rates of surcharge for different types of income, so that his return gets complicated. He has to engage a professional to file his return. I would think that if simplicity is the goal, then do realign the surcharge also to have just 1 or 2 rates of surcharge. Maximum 2.
Yeah. The reason why we are, Ajay, yes.
If please. I could come in, Arun.
Sure.
Arun, I think there's another thing that actually could be considered. One is, you have the slabs and all the complexities that come with the multiple surcharges, about 30%. The other thing is the whole new tax regime, as it's called, which has a better slabs, in my view, has not been attractive, because for a salaried person today, you don't get a HRA, you don't get housing loan deduction, you don't get LTA, but you are in the new scheme, which is why I think that's not been sort of as attractive, and more people have not moved. One thing they could do very simply is to just change that, to say we will give you some incentives, some of those HRA, etc., or housing loan, for example, is a very important thing for salaried employees when they're considering the tax rate. So you bring that back in and then you leave the current rates as they are. And then you could tinker with some of those exemptions in the new tax regime, because that could work again. You just make the new tax regime a little more attractive.
Ajay, I thought the whole, logic behind getting this new regime without deduction was to make it more simpler. Like Anish said, phase out the exemptions. But the fact that only 5 lakh, I read there are only 500,000 taxpayers have gone for it. That's minuscule.
Yeah, that is because, like I said, if you don't get a HRA and a housing loan, it doesn't make it attractive. I would completely agree with their approach for corporates to take away the tax holiday and give a lower rate, because most litigation on corporate taxes were because of tax incentives. How much of litigation was there on a HRA claim for a salaried employee?
Yeah. So we'll take a quick vote. The reason why
is saying, Arun, is right that today, if I am a salaried employee, I am one of those youngsters who's just starting out, right? And then, of course, I need a house. So I will either, want an HRA if I'm staying away from where my town is, or then I will at least take a loan to buy a house. So HRA and interest on housing loan deduction, I believe, should be there even in the new regime, right? So also, I think some saving related incentive also, because people do want to save. India is still a saving dominated economy, though consumer spending is going up and we're seeing higher and higher GST collection. But my sense is that what Ajay is saying is absolutely right. Do not make it so unattractive for a young or a middle-aged salaried employee that he doesn't want to enter this scheme. I think that is a very valid point that I agree.
Yeah. The reason why we started off with salaried taxpayers is not just because it's the last budget before the election, the last big budget before the elections next, but also because if you've been watching television since early morning, quite a few experts have been saying that the sort of disparity between the rich and poor, with 80 crore people still living on depending on ration from the government, and the fact that rural India seems to be struggling in terms of demand. The cost of living in the last 12 to 18 months has gone up exorbitantly. So definitely, if this budget with so much fiscal legroom, with buoyant tax collections, record tax collections, if does not give tax relief to the middle class, I don't know when will the opportune time be. So resting there, we'll take a quick vote. Ajay, Ameya, Anish, you think there will be some substantial tax relief for the middle class in this budget?
I would certainly hope so. And I'm expecting something. And I think the time is right. Not only because of the election, I think we have record tax collections.
Yeah,
Anish
agrees. Yeah, Ameya?
I think we need to.
It should happen. The timing, I'm not sure whether now or will there be any opportunity in between now and next May. So
yeah, you never know. Ajay?
I think it should happen, and Ameya raises an important point, because one thing that this government has done is not to wait for budget to make changes, including a new tax regime for corporates, etc. was announced, mid-year, and you did ordinances, etc. So I would agree with both of them actually that it should happen, and timing we have to just wait and see.
My own hunch, if something has to happen, it has to happen now. So Vikrant, can you bring up some of the expectations that we've read on our portal on taxsutra.com? We've had dozens of articles. So could you please maybe just give us some flavor of what the tax experts are saying, what the industry is expecting, Vikrant?
A lot of variety of expectations. The industry is expecting extension of the concessional tax rate for manufacturing company, and also allowing service industry in that regime 15% tax rate. Also because there's a PLI scheme which needs to be well implemented. Its fruition will depend on concessional tax rate. There's a lot of import from China which we need to counter by domestic manufacturing, and there's been a long-standing demand of the service industry to for the concessional tax rate. That's one. The other I recall is the definition of industrial undertaking under Section 72A, allowing set-off of losses, is quite narrow, and there also service industry needs to be accommodated so as to allow corporate restructuring in service sector and carry forward of losses of the merged company. Apart from that, I believe there's a lot of expectation with regard to VDA. We saw how the VDA, I mean, the transactions moved from India to abroad as the government announced VDA taxation. The TDS rate of 1% is quite high as per the experts. So there needs rationalization there, set off of losses there. Again, the entire overhauling of VDA regime is it's been just 1 year. With regard to foreign investment, there is a need of extending the window under 194 LD and 194 LC with regard to 5% TDS rate. That's expiring on 30th June 2023. So yeah, to attract investment in the Indian debt market, that is one of the asks. Again, there is a gaming industry. Yeah, online gaming, again, the TDS regime, the current one is quite conventional, with 10,000 rupees threshold for lottery and horse races. That's applicable. That was brought in 70s. So currently the gaming industry would apparently fall there, but the online gaming system doesn't function that way. So the need for
Vikrant, you're
special
batting
regime.
for online gaming. I thought all of that falls online gaming, crypto, all of that is sin. It's all sin goods. But yeah, I was just joking. Crypto definitely
First you have
needs
to
a
commit
rethink.
sin, first you have to commit sin, then renounce it, and then you lead to salvation.
But yeah, jokes apart,
That's
Special
crypto
special tax
taxation
regime
definitely.
and tailor-made TDS regime for gaming industry.
Yeah, both
These are
gaming and crypto, I think,
yes,
need
yes.
at least crypto needs a complete overhaul. The 1% TDS on crypto is, as one of our experts said in a panel discussion, it's worse than sin goods. As for gaming, Gamescraft is facing the biggest GST litigation in this country ever, biggest indirect tax litigation, 21,000 crore demand, and their FY22 results just came out. 900 crore profit. So someone in that unicorn space is doing well, is actually posting good revenues as well as good profits. Ajay should be happy since I think they are Bangalore based. So yeah, and now we come to the big Vikrant. Thanks so much. We'll come back to you later in the panel discussion. The big one, the big 800-pound gorilla in the room, capital gains. The motherhood statement is we need rationalization of capital gains. Now, what does that rationalization mean is something that we'll understand from our experts. The resident expert on capital gains here is Anish, Ajay, Ameya, all three. Anish, I start with you. You've seen this capital gain regime now for close to 30 years since you became a chartered accountant, Anish. Now, please walk us through what you've seen and what needs to be done now.
So I think, look, capital gains has always been somebody's, favorite tax provision for tinkering, right? You had a situation where capital gains were introduced, then there was a 5-year period for long term, got reduced to 3 years, got reduced further to 1 year in certain cases. Some of the 3-year, assets got reduced to 2 years a couple of years back. So there is a lot of different ways in which you compute capital. And there is a lot of different rates at which you tax these capital gains. Right? You have for listed securities, the grandfathering up to 31st January 2018. You have for other assets, a substitution of the fair market value on 1st of April 2001. There also, for immovable property, you have only the stamp duty value. So as far as capital gains is concerned, the slew of amendments that have happened over the years, in my view, have only made the regime far more complicated as compared to what it earlier was. Coupled with that, you had removal of DDT, again taxing the dividend, right? So again, there has been, as far as income from passive investment, I would think that it needs a complete overhaul in terms of a reel. And therefore, the least I would expect as far as capital gains is concerned is rationalize my holding period, make it a uniform holding period. I'm not saying it is 1 year, it is 2 years, it is 3 years. I think that is best left to the government to take a call on, right? Having a look at how the stock market will react, because ultimately I would believe that if I see again amendments which relate to capital gains, the stock market always has held sway. So rationalize my holding period, rationalize my computation mechanism, and rationalize my rates. At least that is the bare minimum that needs to happen as far as capital gains is concerned. Make it easy for somebody to compute it. Also, I would believe that as far as exemption regimes are concerned, right, whether you invest in a residential house or whether you invest in bonds, I think the exemption spectrum has become narrower and narrower. And if you want to really incentivize certain things, for example, as Ajay was saying, manufacturing, then why would you not look at investment in a new manufacturing company for making the capital gains exempt, right? Why not? There is
Sure.
nothing wrong if you have to. So relook at the capital gains regime. Look at how they want to, what the public in general wants, and then realign it. I would think that the time again is right for doing that. Hopefully they'll do it.
Amey, we had some 45, 50 questions on Wazir tax, mainly from practicing chartered accountants, which we then got it answered through experts. Some 33 were on capital gains. Incredible. Amey, to you.
So Arun, I won't touch upon, or I won't speak about the listed securities because it's a sort of different ball game beyond tax. But even without listed securities, just shares, real estate, the two main asset classes where a lot of transactions happen. If you just map the different variations and options and on the tax rates, I think there'll be at least a couple of dozen effective tax rates that you will arrive at, and then you top it up with, for example, on real estate, there's a stamp duty valuation which gets replaced and so on and so forth. So the regime, as Anish said, is extremely complicated. I mean, while on the face of it, it looks like 10 and 20% and a final tax rate, but and for corporate, 20 to 30%. But with surcharges and the calculation, the regime is extremely complicated and it surely needs to be rationalized. And why I'm also saying so is because of these rate arbitrage, there is then a tendency to plan and save that couple of extra percentage. I mean, one good thing, and I'm connecting it to the 22% corporate tax regime. I think because the simplicity of the regime, and it is at a sweet spot, the rate of 25%. If the rate is 35, 40, you start to think that can I do something to bring my effective tax rate down? Similar thing happens the moment you see an arbitrage around capital gain rates. There's a tendency to look at a next smaller rate. I think even from a behavioral standpoint, a rationalization will definitely be helpful.
Ajay, in the US, every time there is at least someone in the Republican Party, one wing which says flat tax, someone will say no tax. You had the Tea Party 10, 12 years back. The entire movement of flat tax caught fire. So maybe we should just abolish all taxes and just say a flat tax. Ajay, your expectations on capital gain?
Nothing more to add because I completely agree with what Anish and Ameya have laid out, which is there's a lot of complexity, need for change.
But is the complexity more for residents or non-residents, Ajay? Where is the complexity?
It's for both. It's for both, Arun. And we also had a lot of litigation around it. Whether a non-resident gets indexation, not indexation, how do you compute? Non-residents have one more complexity of conversion into the original currency. So it's overall, like Ameya was telling, there are too many things inside. On computation, firstly, there's one on period of holding, there's one on rate, then there's a surcharge, and then how do you compute it? All of it. And I think in the run-up to this budget, there's been enough that's been spoken about this. Even the finance ministry officials have officially and formally given statements to say we are looking at it and we really don't like something as complex as this. The only curveball I want to throw here is, what Shankar Sharma tweeted yesterday. Interesting. He says during these turbulent times, and I know, and all of us know what he's referring to, the only silver lining, I'm just reading it out. He says one silver lining to the current turbulence can be that the government of India drops any adverse taxation measures on the market, i.e. tinkering, LTCG, STCG, holding period, etc.
Yeah.
So let's see. We'll have to just wait and see. But is there a need for a change there? I would completely think there is a need for a change. It can't be as complex as it is currently.
Yeah, I think
somebody thinks that everything would be adverse to the market. Simplicity is good.
No, I'm not batting. I'm absolutely not going with Anish on that front. I think this will be a reasonably industry-friendly, taxpayer-friendly budget, because with so much fiscal legroom, why would you do anything different? Anything for the new industry? Okay, we've done with capital gains. Yeah, we have a comment. Agree with you, Arun. Abolish all tax and introduce BCTT, that is Banking Cash Transaction Tax, and possibly FBT or Fringe Benefit Tax period. This takes care of widening of tax-based issues and other related matters. Please keep your comments coming. Please keep your feedback coming. Any questions for the panelists? We still have another 10-15 minutes, 10 minutes to go, so we can take some questions as well. Nice to see so many people bright and early for the budget. That's the excitement it causes. Though we all say that this is a non-event, this is an annual statement of income and expenses, but everyone is glued on to it. It's a big fat Indian
The
wedding.
day you will have less than 100 clauses in the financial euphoria will die down. Till that, I think we're
Ajay, that will keep us awake, and it will ensure that Ajay and I have our 10 cups of coffee, but till we go to bed at 3 in the morning. Ajay, to you, in terms of the settlement schemes, the last two settlement schemes have been fairly successful.
Right.
You think to create even more fiscal legroom for themselves, and not just be dependent on buoyant tax collections, you see one more coming, either in the direct or indirect tax space, and therefore which could compensate for any possible tax loss on the relief that they give to the middle class?
So, do you think it should come? I think it should, and I'm personally in favor of those settlements options. And the reason I'm saying options is I'm personally not in favor of schemes being announced every now and then, because then you have people waiting for that. I think it should be built into the legislation. One step they've taken starting towards that is the updated return. Last year, what happened? You could update your return and pay up additional taxes, which is really a settlement in anticipation of what litigation could be, or a position that you have taken, which you revisit. I think having a settlement commission has not worked the way it was expected in the past. So having something like a VSV built into the statute to say after you have a litigation and you give a 3-year window, 4-year window, like you give in a MAP to say you go and file a settlement and settle it. You could even have slabs to say X percentage of interest on issues, etc. I think having some certainty on a settlement built into the statute is something I'm in favor of. Schemes coming around, you will have people who just wait for that, and like VDIS, right? Every few years, if there's a scheme coming for a voluntary disclosure, then compliance and
No, I'm not saying voluntary disclosure, but again, you have 500,000 CIT appeal orders yet to come, which will clog the system. So something like a dispute resolution scheme.
Absolutely, I think it should be in the statute. It should be known. It should be there in the statute rather than a limited window VSV scheme kind of a thing. For it was a success, and there were a lot of appeals which got closed in that VSV window. Why have a window? Just build it in, right?
Beautiful. Ameya, you want to build on that front?
So litigation pipeline, I think one at a very macro scale with a new mechanism of the faceless and the number of cases getting selected for the scrutiny. I think the sheer number of cases which are going for the assessment and therefore the subsequent addition in general has gone down. So I think for the historical, there are still large aberrations, but just from a volume standpoint, it has gone down. Of course, we have a problem around the reassessment, notices being issued. So, I think the dispute resolution mechanism, and particularly say I think there has been a lot of discussion around, can DRP be made more effective, more pragmatic? I think that sort of approach, if it is introduced, can surely help. Point one. Point two, this is not a point related to litigation, but there's one disturbing sort of observation or circular or an instruction around giving more survey powers to the local field officers, which has come in the last 4 or 5 months. I think by and large, people have been happy with less interference and limited number of officers visiting your doorstep, which again will change. So I think just from a policy point of view, friendly regime would be better.
Anish, anything around pillar 1, pillar 2 we are expecting in the budget? That's a question that I got asked yesterday by one of the largest corporate houses in this country. Anything that we are expecting on pillar 1, pillar 2 in this budget?
I think the only thing that will come is, and there is a lot of global uncertainty around pillar 1, pillar 2 still. And therefore, I think only a statement of intent is what we are expecting. That all right, we will move towards curating our domestic law to basically incorporate the pillar 1 and pillar 2 position as far as the tax is concerned. I am not seeing any amendment in the act that will happen this time. I think first the world needs to come to a certainty in terms of what it exactly wants in terms of these two pillars. And I think then and only then will domestic law get amended. But at least I would believe that in the speech, I would believe that there will be some mention to say that we will, as a government, consciously move towards, global tax certainty. And I think that is a comfort that we need to give to investors who want to invest in India. As Ajay rightly said, manufacturing has to be incentivized. And therefore, the least you can give is a certainty to the global investor. To say that
Ajay, largely, yeah.
Sorry, Arun.
Ajay, you go along with Anish, only a statement of intent?
Absolutely. Absolutely.
Great. Ajay, on the MNCs, and this is for you and Anish both. 10 years back, again, the reason I'm saying 10 years is that's when this government came in 9 years ago. We were talking about tax terrorism and adversarial tax administration, a host of retrospective amendments. Assuming we put the ghost of all those amendments behind us, all those controversies behind us, are MNCs, are your clients fairly happy or happier about the tax administration today than they were, say, 9 years back?
Yes, clearly, Arun. I think faceless has been good because, it's a natural fit into how a typical MNC would want to work and deal with the tax office and regulators. Today, there's a trail of everything that comes. Documentation is really what you just file responses to the notices, etc. And at least, going by my limited experience, the number of things I've seen, the mindless adjustments, senseless things which were there just because you had to do something, you picked up a case for scrutiny, have stopped in faceless. Are there still, adjustments which can be avoided? Yes, they are not purely legal issues, but it's definitely much better than 9 years back. The only thing that I keep hearing again and again, and something that the government has to consider, is our safe harbors are not attractive at all. That continues to be a pain for the MNCs. Of course, the larger ones have the option of going for a APA concluding. The smaller ones, which are actually covered by safe harbor, don't find the safe harbor rates very attractive. I think that's one place there's some improvement that can be done. They revise the safe harbor and make it a little more attractive. Otherwise, I think to answer your question, clearly over a 8-9 year period, if we take, they are definitely happier than where they were.
Anish, a quick answer from you.
I would tend to agree with Ajay. I only want to say that there are certain blips which still exist in the system, as Ajay also rightly. Safe harbors being one. You reported the Blackstone case yesterday of the Delhi High. Something like that, where the grandfathering is there, should never happen. Grandfathering should be respected. And I think respecting that will ultimately make the investors feel a lot happier. Today, when you look at the deal space, there is still some jitter over tax consequences and tax authority. And I think that needs to be put to rest.
Yeah, on FIR taxation itself, Ajay, two decades later, you still have anything on Mauritius and Singapore, and the FIR community, always is eyes wide open. Somewhere there still seems to be a litigation overhang on the FIR community. Am I reading it right, Anish?
Yes, there is. And, Arun, that's really not only here, because if you see beneficial ownership is something that's being tested everywhere. Now, at least here we have a circular, and, as long as 789 remains, I think one thing that can be done better there is it's a policy thing. The government actually can reiterate to say, yes, 789 is there. We've not withdrawn it. Therefore, that stays. And you don't on the field go and keep questioning this anymore. or the government actually withdraws 789 and we fight beneficial ownership like everybody globally is fighting today.
Yeah.
That is creating a little bit of a thing, because today when you're planning, when you're putting your structures in place, you say, if I have a TRC, that's enough, I don't need to do anything. But you go through assessment, you're being questioned on beneficial ownership, including, everything that globally is being done on beneficial ownership.
Anish, Ameya, we've not spoken much about corporate tax. So are we saying that status quo?
Yeah, I think there is already a direction to phase out the tax holidays, 15% regime and 22% regime. 22% regime particularly is working well in my view, and I think that's really nothing much to be done. One more important point I would like to see is
Sure.
I'm sort of it helps for the large Indian corporates as well as the IFSC regime and the family office regime within IFSC. I think they have been talking about the push for that, and if some clarity or some incentive, say vis-a-vis Singapore or Dubai, is considered, I think that will be a great aspect. And if Anish has any further insight, I'll be keen to hear that as well. But that's one thing for sure. I think would be keen to that we would want to see in the budget.
I would tend to agree with you. IFSC is something which is very important, and it is really, in a way, the first step towards full capital account convertibility, which we will need to get to at some point. So I think, some sort of liberalization of the IFSC regulation, I think, is important. Tax may be a little less important in the overall context of the IFSC. But I think as an attractor, tax also is important in terms of getting these people, because as you rightly said, you have arbitrage in terms of a Singapore or a Dubai. So I think the only thing, as I see it, is that the government is fully committed towards the IFSC, and I believe that it should happen. Whether it will happen this year or not, we'll have to wait.
Okay, we have a couple of questions, and then we'll close with the final remarks from all our panelists. This is for Anish. Neetu Gupta, what is the announcement you are expecting around pension?
Well, what I am expecting is that there should certainly be some liberalization on the pension. So your 80CCC has to realign, is what my sense is, because ultimately, as Ajay also rightly said, right, that there is a big disparity between the urban and the rural area. And also the fact that today, with galloping inflation, right, people who retire and live on passive incomes are finding it more and more challenging. So I would think that hopefully something on the 80CCC should happen. I would also love it if ultimately this caps on the PF deductions were removed, but I don't think that realistically is going to happen. So let us wait for 80CCC and see what happens there.
Anything for Gift City, AIF, FPIs, asks Harsha.
So I think that, let us wait and see. I believe that taxation of AIFs, and particularly category 3 AIFs per se, is something that needs to be relooked at conceptually, because there are a lot of characterization issues there. And also the fact that, once you tax the fund itself, then there should be no taxation on the investors, which unfortunately government, or at least the field officers certainly, are not very, conversant as far as those things are concerned. So hopefully, yes, clarity on that should always be helpful.
Yeah, Sandeep Mukherjee, is it a good time for government to seriously consider bringing in some form of agricultural income tax, especially for high net worth farmers? The answer is capital NO. I won't even go to my panelists. This is the year before the election. Sandeep, if they are expecting a bigger majority than last time, this is the last provision that is going to come in.
Arun, while I agree with you, another technical answer is they can't do it unless they amend the constitution.
Constitution, yeah, right.
Because absolutely. It's with the states now.
Yeah.
Beautiful. So that's not happening for sure. We'll wind up. Ajay, any negative surprises possible?
I'll just wait and see, Arun. Hope there aren't any. Let's see.
No shocks. Ameya, one big surprise, either positive or negative, that could come in. Anything out of the box?
No, I think there has been some thought around partnership as a vehicle, and there's a clear tax arbitrage available between a 25% corporate tax rate and a 42% individual rate. Partnership is somewhere in between, and I think the regime has become a bit complicated in the last 24 months around partnerships. So that's one, and it's not a surprise, but I do hope around charities. The Supreme Court judgment this year has been, of course, it has interpreted law. Now the ball is back into the court of the legislature. I think they should also think of ease of doing charity in India.
Okay. Anish, how many, okay, we'll put Anish on the spot. How many amendments?
85.
85. He says below 100. Anish can go home early. How selfish that is. How selfish. But on that note, we'll wrap up our breakfast hangout. 75 minutes to go for the budget speech. We'll be live blogging the FFM speech, and you'll have wall-to-wall coverage, minute-by-minute analysis, fine print dissection through the day. We have a webinar at 5 p.m. The first post-budget webinar, where I believe Ajay too will be speaking, led by Mr. Dinesh Kanabar at Dhruva. So please join us. Do join our live blog, keep commenting through the day. And I would also, just a small plug-in, in just a couple of days, we'll be launching one of the biggest books of the year, FEMA legend, Dr. Dilip Sheth's treatise on FEMA law and practice. You can pre-order your copy. If you order it on Reservoir, you get the ebook complimentary along with the paperback. So you can go to taxsutrareservoir.com and order your copy of Dr. Dilip Sheth's treatise on FEMA law and practice. It's now in the 4th edition. It's the go-to book, a FEMA bestseller. On that note, goodbye, everyone. Have a wonderful budget day. My final prediction, I'm putting my neck on the line. This budget will not disappoint middle-class taxpayers like me. Thank you, everyone. For wonderful.
Thank you. Thank you.
Thanks, Ameya. Thanks, Anish. Love doing it with all of you. Thank you.